Thank you, James. I want to thank Tourism Australia for inviting me. But that might be a mistake, I'm considered a bear in the market, and I'll come to this later. But fortunately, tourism is one of the few areas I'm a bull. 15 years ago, and people pushed me to write something positive, and I one day I came up with one of those random thoughts. I wrote about a piece titled "Chinese are coming." They said that after China joined the WTO, Chinese would be going all over the world, and it was just one of the pieces that I usually shout out every week, like three times. And it was reprinted in like hundreds of magazines around the world. I didn't really hit a spot. The story has really panned out even a lot more beyond what I imagined then. Last year, China reported like 130 million outbound tourists. Of course, when it comes to China, the numbers are always big, and then the numbers usually not very accurate. These numbers are all the same. Like half of the people actually went to Hong Kong and Macau, not really like real outbound. But even half of that is like big, like over 60 million people. So I think that's really big. When I wrote this piece 15 years ago, I had these two thoughts. I thought that we're going to drive China's tourism. One was the desire to see the world. That's different from like tourism. Usually, people want to go out to have a good time. Because China was closed for a long time, and I sensed that this desire to see the world, to see something different, and that remains a very important driver. The other is shopping, what people talk about. And shopping actually is due to China's economic model. It's similar to Japan or Korea. During economic development, you have high consumption price and low investment price. These countries want to subsidize the investment. They want to tax consumption. So usually you see consumption prices very high in those countries with very relatively low wages. Okay, and this is this is what I call arbitrage shopping. And you go abroad, you want to buy something low priced, and that force was initially the driver for Hong Kong tourism. Now Hong Kong is dying because of that, because the Japanese yen has declined by 1/3, and suddenly everything in Japan is much cheaper than in Hong Kong. But in addition to this, there's a third force is coming up that also related to Japan is experience-based tourism. That's something that I did not see a long time ago. Now it's happening. People are going to Japan because it's cheap, but then they realize that Japan has a lot more to offer than Hong Kong. So I think that then this means that Hong Kong is probably dead for a long, long time. Because Hong Kong, apart from shopping, it doesn't have much to offer. So this is sort of, and with 1.4 billion people, tourism. The forces I'm talking about will remain in place. So tourism will always be a very important driver. And I think that as the global economy now is very slow, it's been slow for quite a while. Now it's this year or next year, maybe even slower. People will be competing more for this market, and the change I talked about, experience-based outbound tourism, is really related to the generational change in China. It's millennials who don't save money. That is considered a bad thing in China. So, but I think that for the future, I'm very hopeful that the millennials, they don't save money, and they want to go abroad and experience for themselves. So it's not going to be like old people in a bus, eating instant noodle, then checking to LV bag shop and clear the shelf. No, so it's going to be different. So the millennials are now already it's 16 million. Every year, so about 6 million go to college. So the people with money to spend probably out of these 6 million people who go to college and when they graduate. So these sort of it's still a big number, and it's going to change the nature of Chinese outbound tourism over the next 10 years. It's going to be a very different market. And Tourism in Australia is very kind to put me at the Darling Hotel. And I walking inside, I felt like in China, So everything Chinese, and people speak Chinese food, then the casino. So that's sort of it's so Chinese, So I think that coming to the future, I think this is where why people think they always brand me as a bear. When it comes to China, it's never black and white. So I was bearish because that I felt like China was investment-led, and most of people who talk to me are stock market investors. And for stock market investors, you don't want a high growth or low growth. It may not be bad because that you want companies to make money. And when companies make money means that you don't want people to create a lot of capacity, invest a lot. So that's sort of so when people go to East Asia, because they think there's high growth, then you can make a lot of money. They often make a mistake. But the reason is because that East Asia, high growth is driven by investment. And investment means that a lot of capacity, then a lot of competition. That means that not much profitability. So this is why the stock market has always not performed. Even though China's economy over the last 30 years is up like 30 times. So it would be, in any other country, that the stock market would have gone through the roof. So the stock market should be up like hundreds of times. But you look at the last 20 years, Chinese stock market is basically range bound. This is crazy for an economy that's grown so much. So that's why China has become a very speculative place, because people kind of try to make money in this up and down. The government encourages this kind of thinking. They think that if you don't make money, it's because you are not lucky. You did not get out at the right time. So the government has been encouraging this speculation. The reason because that speculation is good for the government is because so much investment means no return on investment. So you need subsidies. Gambling is a way to subsidize investment. And because you are not expecting companies to make money for you, you just want to see the volatility. As long as it goes up and down, I have a chance, right? I have a chance. So that's sort of a way of thinking for a long, long time. And people were bearish about China, then they all got blown away because China kept going up. This story finally came to the end during the global financial crisis. I always believed that Chinese model was sustained by China's over-investment model was sustained by overconsumption model in the West. Okay, the overconsumption model was driven by credit. Okay, so this is why in the last 20 years I've been watching the West. Someone like Greenspan. Really, Greenspan started this world. He felt like the way to manage an economy is somehow you can tickle the monetary policy. You can make the people spend a bit more, a bit less. That's how you manage an economy. That's a very stupid way of thinking because because the economy only changes if there's investment. If in a country, if you do not see investment, this country is not going to change. If you make the consumption go up and down a little bit, this year up a little bit, next year down a little bit, there's no change. But Greenspan did not know that what he was doing was to encourage China's over-investment model. So the Western credit-driven consumption and China's credit-driven investment kept going up. And in 2008, when the Western the financial crisis happened, I wrote a piece that okay, China would do investment stimulus, but it would be a huge mistake because the crisis was China's customer, the Western consumer, was going bankrupt. So if you do investment stimulus, investment is not a final demand. If you invest, you expect that some people will buy something from you. Otherwise, you wouldn't be investing. Okay? So if the customer is bankrupt, then you are investing for your customer. You're nuts, right? So So that's what I wrote in 2008, and that, a lot of people were upset. It was because that I was not only saying that I was predicting the people, that very powerful people, they would make a very stupid mistake. So they were very upset because of but I knew that they were doing that not really because they believed in it, because they were trying to just get through over tomorrow. That's what politicians do. They don't care about the future. They care about tomorrow. If I get through tomorrow, maybe the day after tomorrow, somebody else's problem. It's not my problem. Okay. So the world that we're seeing has so many problems. Is it because of that? That's why Donald Trump is rising. Okay, so this is a sort of the establishing politicians. All these Harvard and Yale graduates who are making this world a huge mess. So the people, it's right. People believe that these guys who look like very educated, these are bad people. China's fixed investment GDP ratio rose over the last, since 2008 from 54% of GDP to 83% of GDP. Any economy with that kind of fixed asset investment is just nuts, crazy. The reason why it's risen so much is because exports have been rising slowly. And exports to GDP ratio has been declining from 31% to 21%. But previously, both ratios were rising. So the investment-led model works. The investment model is really build they will come model, right? I build a casino, Chinese will come. So don't worry about it. You build a casino, it's empty. Don't worry about it. Chinese will come. So that's the investment model, okay? But tomorrow Chinese don't come. What do? You build another casino, yeah, because to keep it going. So that's what China is doing. That they build a factory, people not buying. So what do? You build another factory to employ the factory you built before. So the steel mills, at one point, 1/3 of the steel supply was consumed by people building more steel mills. So that is sort of the story finally started to crack in 2012. The economy has been slowing down for like 3 years, but the people all over the world didn't notice because Chinese, when it comes to China, people have different standards. They think China is mysterious. It's conventional wisdom does not apply. Chinese leaders look so sure about themselves. They come out and they say, yesterday, the premier of China was saying that there's no chance that the economic target will not be met. Everybody thought that, wow, the guy was so confident. Of course, there is the Statistics Bureau. When the premier says that it's 6.5%, you believe the Statistics Bureau will say it's 6.4%? So it's highly unlikely now. In the last 3 years, basically, suddenly you cannot go on building more capacity anymore, and also with more buildings. In the last since 2008, China's debt is up over $20 trillion. And that just to put it into perspective, that's half of the total debt in the United States. So China has run up this much debt since 2008, and every year China is running up like what is that? It's like about $4 trillion a year. About $4 trillion a year. Now the debt now is you increasing debt. It's because it comes to China, every number is big. So when it comes to debt, you really frighten people because the number, the big debt number is always means something. People think that something bad is going to happen. Now China, in the last couple of years, China has been encouraging, the government has been encouraging this subprime phenomenon. When this subprime crisis happened in the United States, what the Chinese learned from that is, you can do subprime. That's wonderful. That's another tool. That's another tool to keep it going. So like in 2004, they encouraged stock market speculation, basically through margin lending. It's not just from brokers. It's from so-called from the internet companies. So the internet P2P companies were mainly engaging in lending money for stock speculation. People were borrowing 90% of the money for buying small cap stocks. So the stock market went up 150% very quickly, then crashed, right? Then crashed. Then the government has been doing like a subprime financing for down payment in the property market. So that caught people's attention when the Shenyang government, it's in the northeast China. It's actually a very large city with probably 10 million people. You probably have never heard of it. But a lot of people from Shenyang actually come to Australia. Now the government basically sent a document to college students, said you can buy properties with zero down payment. That caught people's attention, zero down payment. The idea is that you get students to buy, then their parents would pay. So this is like the credit card bubble I saw in Korea about 15 years ago. They were giving credit cards to college students, and they at that time people were worried about credit risk, and the credit card company said no risk because their parents would pay. In Korea, everybody pays. Then when push comes to shove, their parents didn't pay. So that led to a crisis. So so now after this caught media's attention, the government was was embarrassed. They said zero down payment, not anymore. Then what about 5%? They didn't mention about 5%. So basically now this subprime bubble only is happening in tier 1 cities because the supply is so huge in other cities. You cannot get it going anymore. What you could get it going is that the government would give money to the people to buy properties. It's through resettlement. So that gets it going a little bit. I'm dwelling on the property a little bit because this is the key. Half of China's debt is related to property. Okay, China's total debt this year is about 300. Last year was 314%, 15% of GDP, and this year would go up to 350%. And the economy would be 11 trillion, so it's over 40 trillion US dollars. Okay, half of that is related to property, and there are 6 billion square meters under construction, and you give it a reasonable market price. You are talking about basically that's inventory. It's equivalent to 100% of GDP. Something like this has never happened before in the world. So this is sort of that means that a hard landing is almost inevitable. And what is this subprime speculation happening is to just delay the inevitable. When people there are another subprime story going on. One is on debt equity swap. The banks, when companies cannot pay you back, the banks can convert debt into equity, and they don't have to book that as bad loans. So there's no loss. Okay, so the banks basically do not have to report bad loans. The other is the companies can issue debt at 40% of net value. If you listen to this line, you may think it's reasonable, but actually it's crazy, because that you do not talk about the existing existing leverage. So if you do the 40%, you can do another 40%. You do it forever, then it becomes infinite leverage. Okay, so Chinese are very clever. So that's sort of trying to. Actually, this is crazy, but it sounds reasonable. So I think that this subprime thing is like probably the last trick. You keep it going. Once this blows up, we're going to see a hard landing. But but can the government pull out another trick? You never know. But the Chinese government is controls the media, controls everything. The imagination on their mind, there's a possibility the Chinese people will buy all this crap, and the government will have no problems anymore. So that's the idea. This is where people outside of China are very difficult to understand. Chinese government wants to make money from Chinese people. That is not true anywhere else, So that is the reason China, even though the economy is up 30 times over the last 37 years, Chinese people are still relatively poor, and the urban disposable income is 30,000 RMB. That's about $4,500 US. and the rural disposable income is 10,000. That's almost nothing, right? So for a country that is like you go to the country, it looks like a first world country. It's also spanking new infrastructure everywhere and all that stuff. How could these countries be so poor? That's the East Asian model. You subsidize the investment. And so when you come down consumers, when you talk about a consumer economy in China, when people talk about consumer economy in China, you don't know what you're talking about. Because this is really, China's politics is not about consumption. So this tourism is really something that has very important. I'm worried, what worries about me is that the government may build barriers for outbound tourism. Because you look at the Chinese people spend 2 trillion RMB overseas last year. That's like 300 billion US dollars. And a lot of people at the top of it would think, oh, if this money we're spending in China would help us, right? So especially, Chinese people spending money in Japan, they're helping our enemy. What's going on? So that is like if that happens, this is going to be very bad, I think. But I'm very hopeful about the future because Chinese people are very productive. You look at the survey by multinational companies. Chinese workers are as productive as the workers in the United States, if not more. Okay, but the wages are only like 1/8 as much. So. When people say the Chinese currency is overvalued, it's only from a different perspective, from the competitiveness. Okay, China is super competitive. The issue is demand. So the Chinese currency is going down because the overinvestment. You cannot make money inside China. So there's money flowing out from this elite. They take money outside because it's impossible to make money in China because of overinvestment. It's not because the Chinese people are not competitive. Okay, so that's sort of in the long run, Chinese currency should appreciate, not depreciate. Okay, but in the short term, it's a really political phenomenon. The currency is facing depreciation. So last time China faced this challenge was 1998. I thought China should devalue because Korea devalued so much. At that time, China was small, and Korea was not so small. So I felt like China should devalue. Then the premier of China went on CNN and said, we will not devalue. The reason is because we are big. If we devalue, other people will devalue. Where's the end? Okay. The other is that our wages are so low. Why should we devalue to achieve competitiveness? If we are not competitive, it means that our economic system is bad. So we should reform. So he started all these reforms like property market, privatization, state-owned enterprises, shrinking state-owned enterprises, restructuring state-owned enterprises, listing all these state-owned enterprises, and joining the WTO to welcome FDI and turning China into the factory for the world. China's growth over the last 15 years is due to the reforms that Premier Zhu Rongji did then. And he took advantage of the crisis to engineer all these reforms. So but in the last 3 years, the same opportunity came, but no reforms. We're seeing these delaying tactics. I don't know what's going on. I think that I was very hopeful 3 years ago. I thought that the current #1 guy who came and said a lot of positive things, he felt like the stimulus was bad. Last time. I thought that was very important. He recognized that. So maybe China will do some reforms. So far, no reforms. Now, even the media is shut down. You cannot even talk about economic problems anymore. Now, this is like in the media, if you talk about the economy, you have to follow the right political line, meaning that someone like me could not speak publicly in China anymore. So this is sort of a major step back. But what's going on is not sustainable because I talked about millennials, different type of tourism. People want to experience something. The millennials it's not like the people who grew up like me, grew up during the period of starvation. The people the basic driver for people who grew up during starvation is survival. So they can be scared easily. So the government will say, you are better off now. You have a full stomach. How can you complain? But the people who grew up without worrying about food. They are very different people. I think this is where the government does not understand. It's just, these older people in the government, they have no linkage with this generation. So these people, I think, will change China. So over the next 10 years, it's going to be quite turbulent. I think it's quite turbulent. And for tourism market, maybe if China does have high landing, it will be an impact. But I think over the long run, I'm very positive about the tourism, about the China per se. I think China is not about competitiveness. And when China came out, a lot of people thought China was an emerging economy. That was a mistake. Because China was very productive, very developed in the 1930s. And before the 1930s, for 60 years, China was developing very steadily. And in the 1930s, Chinese coastal cities, where the gap between Chinese coastal cities and the Western cities was not that large. And Shanghai started growing, but at the same time as London, because most buildings in London were built during the Victorian age, and Shanghai was already happening. And Shanghai was the third largest city in the world, the second largest financial market in the world. So even today, the wage gap between China and the West is bigger than during the 1930s. So when China came out, China was re-emerging. It was not really like another emerging economy. So when people say, "Oh, India is the next China," now these people don't know what they're talking about, because India was not interrupted by anything. China was interrupted by wars and revolutions. And China went into this self-imposed stagnation for 60 years, basically, or for about half a century, 50 years, then came out. But the productivity was there, even during this period of suppressed economic development. So China, this explosive growth in terms of productivity is not like due to economic policy. It was just due to the suppressed, through globalization, all this suppressed energy could be released into the global economy. This is where a lot of economists in the world don't understand that. So I think that if you look at it that perspective, China should easily achieve $20,000 or $30,000 per capita income. That means China's economy will be twice as big as in the United States. And only 5 years ago, I was predicting China would become bigger than the United States in 2022. That is like 6 years away. But now with what's going on in China, we delayed a bit. China is, people always say China is big. That's important. China is big, but also makes China a little bit unwieldy. It's difficult to manage. So in the last, China's economic development in the last 140 years, it's been like a zig and a zag. It's not like Japan. A country like Japan and Germany, when they develop, they go like this, then hit a wall really hard. Right? The Japanese and the Germans, they don't need the Communist Party to make them work together. They just naturally work together. They walk to the cliff. Over 100 years, they walk to the cliff and then drop. But the Chinese are different. Chinese are really unwieldy. They zig and zag, and every 20 or 30 years, you hit a wall. So hopefully the wall is not so hard. So I think that that's I have to say. I think that in the short term we need to be a bit cautious, and we know the market is going to change. Over the long term, I think that we can all be very positive, but we need to invest for a different future. The future is different from the past, and it's not going to be a bus. Busing in all these gray-haired guys and into the casino. Now that market, I think, is not going to be around for very long. I stop here.
Great job.
Should I sit down?
Wait, do you want to sit down?
No,
we can stand. Yeah, that's a great ending. Just stop here. Stop. If anyone wants to ask a question, just put your hand up. We'll get a mic to you, but I've got a few. What's your best prediction for what will happen? I mean, you've told how the mix might change, but for numbers of outbound travel from China over the next 5 years?
I think that 10% is still possible. I think that 10% is on the 60 million, is not 130 million. Okay, so even you see this 130 million number doesn't move, doesn't mean that the market is not growing. It's really Hong Kong and Macau are going to wither, I think. Right? So the 60 million number will continue to grow at 10% or so. There's another driver.
10% a year.
Yeah. Another driver I didn't forget was it's the pollution driver. It's I think that the outbound tourism, sometimes you go abroad, you say, wow, it's because the pollution is so too bad. I go somewhere, I can clean my lungs a little bit.
Yeah.
So, and that will in turn change China because people go back and say, why shouldn't we have clean air at home, right? It will become a political force. It's a matter of time.
Economist Warren Hogan yesterday said that traditionally the Chinese had underconsumed and oversaved compared to many other people. They'd saved a lot, but he said that will change. And I think you were saying a similar thing with the millennials, that there'll be more discretionary spending.
Chinese oversaving, it's really not exactly true. Because
maybe we undersave.
The reason is because it's the government that's, most savings in China are forced savings. It's Chinese people are saving like 30%. It's similar to Japanese during this high growth period. But Chinese investment is 50% of GDP. Most of the savings in China come from the government and the companies. The government taxes about 32% of GDP, plus 6% contribution to the social welfare funds. And they give the people about 10% of GDP. So they spend 26% mostly on investment. So the overinvestment story is not due to over-savings by the Chinese people. It's really due to the government. It's the economic model. It's not because of the Chinese people. So it's a political force. That's where what the people sometimes they mix the cultural phenomena with the political phenomena. It's Chinese overinvestment is really a political phenomenon.
So that means that we heard some information yesterday suggesting that Chinese consumers are likely to have more money to spend on things like holidays over the next decade. Do you agree with that or not?
I think that I hope so. I think that now it's like millennials are now saving money, so they spend whatever they earn. So that's but that is not sustainable in terms of growth. What we need is for disposable income in the economy to grow. Disposable income is only 40% of GDP. In Western countries, like 75%. In most developing countries, it would be like 60%. So the government is taking a too big a share of the economy. So what we need is for the government to cut taxes and give the money to the people to spend. The government cannot let it go because of the political system. The Chinese government officials, Chinese money supply keeps growing at 23% per annum for 37 years. The reason is because the government officials want to spend money. So then they try to stop inflation. How do you stop inflation? When you increase capacity, you create these supplies. So then inflation does not happen. So this is sort of what I see is that the key is for China to become normal economy. Okay, what's going on in China is not normal. It worked for a period of time because the Western consumers were consuming. So that force was supporting China's overinvestment. Now this is just not sustainable. So China must change, and regardless of their preference.
Now, if some people in this room got a proportion of their business from Chinese tour groups, would you say to them, well, that's fine, but that might diminish. Be prepared to have an offering for more individual tourists, less groups.
Oh, that's absolutely. I think especially if you have a visa, I think a visa is very important. You look at Thailand and Indonesia. A visa is a very important issue. Once they introduce a visa upon arrivals, and the market just changes dramatically. So for millennials, that's especially important. So people come in individually, and for about 8 million to go to Thailand every year. Now, this number, I think, will continue to grow. So, so really, if Australia one day changes its visa policy, this market will change dramatically. So I think that for people here, you really need to be prepared for that. I think in China, the millennial is very much driven by online kind of information and also word of mouth from your friends. So those things are becoming more and more important. So the marketing becomes much more decentralized. You have to be savvy understanding that instead of going through fixed channels. So I think the future is going to be different.
One final one. You mentioned earlier that there was a possibility that the Chinese government might limit overseas travel, and I don't know whether you felt that when you said that a ripple of fear swept through the room. Everyone went, what are the chances of that happening?
I think it's still low because what they have done is that for this Union Pay card, they have limited the spendings. I think it's not about 100,000 overseas per year.
Yeah.
But in China, it's like when the government has this policy, then people have countermeasures. They get more union cards. So it's like. But I think that the issue is that you see that the government is trying to slow this thing down.
Yeah.
It's like, but what's going on is rational. People want to value for their money, right? So you go to Korea. Korea tourism is largely driven by this cosmetics thing. They somehow managed to make Chinese believe that the Korean cosmetics are great, which is nowhere else believed. But only in China they believe that because they somehow have shown all these actors and actresses who look reasonably good, and they said they use these cosmetics. If you use these cosmetics, you look equally good. So China taxes these cosmetics a lot. So then these people all go to Korea to buy cosmetics. You go to these
really?
Airport like in Seoul. It looks like a factory because all Chinese buy all these people they're actually smuggling. They get a lot of cosmetics. Then they go to the airport. They have to take the box out because the box is too big. So they take the box out. They put everything neatly packed together in a suitcase. Then they go through the customs. I'm sure that the customs officers are bribed, right? So they go through, get through. Then they got boxes somewhere else. Then they repack and they sell in China. So I think that I'm not sure this business is sustainable. I'm not sure this is because nowhere else people think that Korean cosmetics are great. So but somehow it works for now.
Yeah, right. I'm really not an expert on the quality of Korean cosmetics, but I'll give them a go. That was wonderful. Thank you very much. Please thank Andy. Well, great job. Thank you very much.